Hey guys, welcome to this video. In this one, I'm just going to run down the S&P 500 E-mini futures. It's more or less just going to be an update on the market at the moment. Always good to sit tight, good to listen and take everything in, because at the end of the day, I like to go through things that are important, things that are going to benefit all traders, no matter on your level. And normally we take things from a perspective that everyone will understand, because at the end of the day, simplicity is key. Getting things straightforward as you can so everyone understands them is really what you need to do if you want to transport the ideas from your brain into other people's. And of course, the S&P 500 is an easy way to do that. So near term, what are we looking for? Let's start it all off with what happened previously. Of course, I did go over this. If you've not seen my recent S&P videos, if you are watching this a bit further in the future, just look back on my profile wherever you're seeing this. We, of course, rose up to this 100 MA, okay, and previous price action levels along here. And we labeled these quite simply because they're obvious to us. We know what we're looking for. We know what's going to cause an issue. And we knew we might get up to this further wick, but we didn't quite get there at that point. But we saw price rejection. We saw market sentiment drift downside. And we said, okay, well, where are we going to look to exit? And we looked to exit right at this point here. Now, why was that? Well, it's rather simple. It's because of all of these previous price action levels on both our higher time frames and indeed our lower time frames. So I'm not only looking at the market on the weekly, I'm dropping down to the daily and beyond. Now, you can see that you could have traded this a few times to the upside, and of course you would have done it with light sizes, because the market is not looking extremely strong to the north side just yet. Okay, and that's because our underlying market sentiment is poor. We're not completely out of the woods. There are little reports that things are slightly better here and there, but really we're not seeing any clear sky to the upside yet. Now, what's likely, in my opinion, of course, is that you're going to rise up within this dwindling market sentiment. People aren't really trading. They're away doing stuff, enjoying Christmas holidays, New Year's, etc. And, you're probably going to hit on some early resistance at this point. And depending on the market sentiment in the near future, you're probably going to dawdle. Okay, and you're probably going to go side to side a little bit. Now, if the market was to return to such previous price action levels, you would have to come through here first. Okay, which is why I would save off any light shorts until you get up here. So don't short until you get to this point, and I wouldn't do it heavily. You've hit on this level several times. Okay, just add in like you were and use that for market inference. You can see exactly where the price has been hardly rejected. Come up, we're looking to light short here, and if you look lower down, this is going to be your light long, sorry, too much Christmas drink. It's going to be your light long zone. And that's because you're coming down to previous long zones, but they've been hit several times, and the overall market sentiment remains not extremely strong. Okay, so this mainly is referring to these previous support levels here, but this is not the strongest area, and I would only look to take this very lightly long. Okay, if the negative market sentiment underlying long term persists, as you've seen for about a year, you may see that we get slightly lower than this low, but you would need something like that to happen in the news, which we're not seeing at the moment. So what I'm really saying, guys, and what I'm more or less trying to prepare you for is areas in the future. If we take out any near-term areas, you are left with these gaping holes in the market. Now, at this current point, you would have to be a scalp trader because you're not seeing enough movement and there's no market sentiment. Okay, you're going side to side, hardly anything's happening. You would need to be scalping. If the market falls, however, you're going to be in a much better position. And if it rises, you're going to be in a much better position as well. But you're at a point where either side, because of the channeling market, just trade it more lightly. Okay, and you quite often with markets like this, same thing happens with the FTSE a lot. You will go sideways for a considerable amount of time, or you won't drop really far or rise really far for a long time. And that's exactly what you've seen since May time, since June time. Okay, so the summer, really you're almost back where you were. And that's because you've not seen any prevailing market sentiment. Eventually, this will either go very hard up or very hard down, okay? But whether it comes from this point down here or much further up is yet to be seen. And that's because we're at a difficult time in market sentiment. We're well within global economic recession, okay, or recession in a lot of major economies. And you're waiting for that move. Is the market going to go up or down? Now, you don't need to know specifically when that's going to happen. You just need to know how to get in and where to exit quickly, so that if the market does keep going in the other way, you will survive it. So you want to plan for early exits, okay, and you want to drop that trade size accordingly to the market at the time. So you'd be trading small where there's a lack of market sentiment, not much is going on, the market's going sideways, okay, and you may change that position size if you're hitting a fresh level and getting a much better deal, which is obviously going to be under this previous low here, all the way down 3, 4, 10 area. So it's very easy to identify that on a market such as the S&P 500 E-mini futures, and that's just because the levels get so clear. If you flick to the monthly, you can see that. If you break through here, you may trickle to this part, and again, you'd be scaling in lightly. So you've got an idea on near-term positions. I wouldn't look short until you have a bigger gap up, and I wouldn't look long until you see a larger gap down. If you are going to take it at either point, I'd probably take it fairly lightly, maybe slightly larger on the upside, but lightly on the long again. It depends on the market sentiment at the time, which I will update you on. So thanks for watching, guys. Light shorts up here, light longs down here. Manage your risk, trade safe, trade small. Let me know if it helps or not. Come and join us in the comment below or the description, and I'll see you, of course, as always, in the next one.